Welcome to another episode of Limitless Trading. We're recording this on Wednesday after an amazing move that we had been planning out. We gave you guys the trend lines. We gave you guys videos on the trend lines that were old that we saw, that we said, hey, this is why we keep them. I know some people say, hey, it's a little crowded, a little messy. Guess who didn't get bear trapped today? Limitless and my group were able to see this in advance because we saw the trades, we saw the trend lines, we saw the support resistance, we saw our pivots that we discussed, we saw our dark pool as well. So what do we do next? As I said to everybody, if this green line, which was an old trend line, defended, which was around 48.50, the market was going to start getting a little trappy because they have what we call the island boy. This guy out here at what is this 55.50 was going to want to get out of this short. All of these people that shorted want to get out. As a matter of fact, POTUS still has a friend at 55.83, actually 56.26 would get his friends out here, and then his boys up in the nosebleed. That you could check the other videos out that we tagged regarding that. So we said if we defend this, we start working 49.08 on the daily, 49.59, 50.35 was our sign of a recovery. And then above 52.12, we were going to go back and test this trend line that was a breakdown of the 55.31 that was from the original contracts of Q1. And as of this closing, we're actually hitting our head right on that trend line on what was a bullish divergence that failed when POTUS went a little crazy with these tariffs. So what did he do? He reversed them, giving his friends time to get out. Our guys saw the trend line, we saw the pivots, and we still have more pivots coming. And we took the squeeze, we took the long. We said, hey, if it goes long, start going, because there's no way to start a new trend line. If you were wondering, well, when is trend lines you keep on your chart, you can either diminish them, change the color so that you know past trends. Why? Because algos are based on past experiences. Why did it go exactly on an old trend line that was old liquidity? It's not luck. We knew it was there. We knew that there was a possible resistance. It was going to cool off, and that we were going to back test liquidity. Same thing. That's how we knew that 55.75 was going to back test. Market makers want to get out. The wealthy don't want to get trapped in positions. They want to squeeze, get out, buy time, then roll over, buy low again, and keep going up. Market goes up, and even in a bear market, it goes up 80% of the time, even more violent. I suspect that we don't know if, let's see if CPI is bullish tomorrow or not. And then we get these boys out at 55.78 and 5,600 and change, or start the summer bull rally now. Possibly not, because we have some bearish pivots coming. But regardless, the trend defended, the support started holding. We blew out of the resistance. We broke even more resistance. And now we're at the top end of a former failed breakdown that is now becoming resistant. So if you took the long, all you're doing is running stop losses. And I also said, hey, if you want to take a short, wait for a back test, something that fails. 52.12 did not fail. The 53.90 that we said was 54.31, which was a little bit of somebody getting stumped here, hoping that there would be a reversal on tariffs. They got stuck. We said, let the trend line come all the way back, and then maybe take a risk of put if you think, hey, this is overbought. And the news wasn't really bearish. China's still on the tariff list. And there's not a lot of reprieve, but the market overreacts in both directions. We had a sharp overreaction down, which we said every reaction is an overreaction. And now we have, a short covering, which is still bearish because we're still down 10%. We're still in a bear market. But now you say, okay, well, if they backtest a trend line and fails, do I take a short back to 52.12, or at least into 53.90, because the market could turn this line into a support, which is a prior uptrend, and start working their way back to get their friends out, at the 57.75, 58.46, so on and so forth, and get all the bulls out that were trapped on the election and the tariff news. Give them time to get out before this tariff war turns into a mess. But one level at a time. On the smaller time frame, again, we said 58.73 defended. If the market retested, we said if you see 52.90 on the smaller time frame, go short into the Tuesday pivot that we had, but be careful because we had bullish pivots coming in, And in fact, 58.73 held. And you could tell when a level holds and you start seeing patterns like this, even you could say, okay, there's bull traps, there's bull flags and stuff. Absolutely. But the market goes 80% up. So if you see a inverse head and shoulder on a small time frame, that's market makers developing a pattern. Does it mean it could fail? Absolutely. Here we rejected and it was a great short, and then we said, hey, if 58.37 starts defending and we start crawling up, 5800, 58.75, we were off to the races. And as of this conversation, we're hitting our head at around 55.10, which is really, really close to that trend line. You see this little green line is on a different chart. That's a resistance that could turn into support. And then we have another one up here in the nosebleeds at 58.80. But nonetheless, now, do you want to short? Okay, you can definitely short, because on the larger time frame, we hit our head on this. But again, the three wise men have to get out, and we need about 56.30 would get them all out. Or at the very least, if they get to 56.09, it gets everybody out and one guy gets out of the loss. So don't immediately jump short when now we're on an uptrend and we're defending. You could take it, but again, be very, very careful, because you're very much so, we're still in a bear market. We just rallied for one day and we can collapse on any more news. But let the levels hold, reject, then take your put and be very, very careful. Again, I don't like shorting oversold. We're still not overbought. I would rather get the three wise men out here in the 5,600 area and then possibly take puts into FOMC, because I don't think Powell is going to come to the rescue. But that's a video for another day. We'll see if CPI is bullish and it continues to rally. Again, getting everybody out on this good news. Bear trap everybody here, and then maybe bull trap some folks at the intersection, actually here on the 22nd. But one level at a time. Let a level reject, like I said, 55.31 rejects, then this trend line is a bull trap. And then we have to see if the 53.90 becomes a support. And then we keep rocking when this next intersection, which is about May 5th. Coincidentally, it's FOMC in the FOMC area, which is, if I check our notes, FOMC is the 6th. It might be a perfect trap where these line intersects. But again, if your level rejects, take your put, bring her back down, and then just keep that that stop loss tight, because we have a reprieve coming, right? That's going to give bulls a time to get out. Now, if you miss both and you say, okay, I don't really want to short because it looks like, they want to go up and get these guys out, then you want to wait for something to hold, like 53.90. You want to be careful because this is a hell of a run, or at least 52.12. I really prefer a back test of 50.35, or at the very least 59.08, and then keep scaling long, because now we're in the middle of two levels, right? We're in the middle of this squeeze and then a possible rejection or rolling over. It could be a hot CPI. We have the jobs report on Friday. We have tax day coming next week. One pivot at a time, small levels. Again, let something back test. I say at the very least, if this is going to turn into, let's just say, this was an inverse head and shoulders, but there's also a cup and handle. Let it come back to at least the 52.90, which we had said was resistance. Let's see if 52.90 maybe turns into support, and then you risk on. If not, I would very much like to see 51.30 or the 50.75 turn into support. But if you like this content, you want to join our group, subscribe, like, email us, or comment Discord below. But if you go to the description, the email for our admin is on there. You could email that you want to join the Discord, or if you want to take the course, we have a very quick 4-week course that shows you these tools so that you could just kind of do this on your own. If you don't want to be, a part of a daily Discord doing this, and you kind of want to do this more independent, we're happy to show you how to beat the market. The market is beatable, and Trump is very much beatable. We've survived 20 years of markets, and we want to kind of give back to the community, because we know this is life-changing money you could make if you have the right tools, both up and down, to be able to, take the trades, to be able to stack these gains. Good luck.